Welcome once again. So we looked at the 51% group holdings. We are now going to take a look at the 75% groups and then the group reliefs available to these 75% groups. Okay, so let's take a look at it. All right, so 75% groups have two different reliefs. Okay, so we look at the group reliefs and then the charitable gains reliefs. Okay, so first, one step at a time, let's look at the groups, the structure, and then we can look at the reliefs available to them. Now, 75% groups. So company B is said to be an example. Let's take company B as a company, okay? It's said to be a subsidiary of company A, okay? Or it's said to be a 75% subsidiary of company A if all of the following conditions are met. So one, when company A owns directly or indirectly at least 75% of the share equity capital or ordinary share capital of company B, okay? Again, if company A is entitled to at least 75% of the profits available to the ordinary shareholders of company B, then we can still conclude that company B is a 75% subsidiary of company A. And also, if company A will be entitled to at least 75% of the assets available to the ordinary shareholders, if we are to wind up or to liquidate company B, okay, then we can say that yes, company B is said to be at least, is said to be a 75% subsidiary of company A, okay? So take note of that. At least when company A is owning either directly or indirectly 75% of the share equity, if at least 75% of the profits available to ordinary shareholders will come to company A, okay? And if company A would be entitled to at least 75% of the assets of company B in terms of liquidation, in terms of winding up or closing up the business, okay? So take note of that, all right. Now, we continue. So two companies are either members of a 75% group if one company is 75 subsidiary of the other, or if both of them are 75% subsidiaries of a third company, okay? So two companies, A and B, okay? A and B, assuming these A and B were owned by X, and indirectly or directly, this owns 75 and at least 75. So 75 here and 75 here, okay? Or assuming we have another company, Y, okay? And X still controls 75 at least. So Y becomes a subsidiary of X, but again, A and B, which are also owned, 75% of them being owned by X will also become subsidiaries of company X, okay? So what are the main implications of being part of a 75% group? There's a greater chance of paying by installments, okay? So augmented profits limit 1.5 and 10 million, which are used to determine whether the company must pay tax by installments, are both divided by n+1, you remember? Where n is the number of those related 51% group companies. Okay. Now, dividends received from the 51 subsidiaries are disregarded when computing augmented profits. So we look at dividend outside the group holdings. Now, if 75% subsidiary, then it must be a 51% subsidiary, okay? 75% simply means that we own more than 51%, okay? So if 75% subsidiary, then it must also be a 51% subsidiary, ideally, okay? So we can say this applies to them as well, okay? Now, let's look at further implications, okay? Now, there could also be group reliefs. There could also be group reliefs, okay? Where we could transfer, or amongst the group, they could transfer certain losses and deficits between the group members. Again, there could also be chargeable gains relief, where there is the right. So it is a right, okay? It's a right. It's not a privilege, it's a right. So neither is it an obligation, it is a right. So you need to exercise that right. So also there is the right to transfer these chargeable assets, okay, between groups, so that to result in no chargeable gain, all right? So that's also two other reliefs that apply, okay? Now, groups can be created through companies resident overseas. Okay, so only companies which are resident in the UK will be claiming or could be surrendering group reliefs, okay, the typical exam scenario. All right, so we're looking at only those resident in the UK. Now, let's take an example of this. Now, we ask ourselves, which companies, okay, which companies may Z Limited surrender its trading losses to? Z owns 100% of A, so easily it falls within the 75, right? A owns 80% of B, so effectively 100% times 80%, still 80%, okay? So this is also acceptable. Now, B Limited owns 80% of C, so the indirect between A and C will be what? 100% times 80% times 80%. Okay, so which roughly should give us something around 64%, and it falls outside the 75%. So for sure, this will most likely be out of the scenario where Z, okay, where company Z could surrender or transfer its trading losses. So it could transfer its trading losses to A and B, but not C. All right. So for the year ended 31st March, Z PLC has an unrelieved trading loss. Okay. So to whom can they transfer or surrender these trading losses to? Yes. So like I said, A Limited, it owns 100%, so it could transfer it or surrender it to them. B Limited, it owns 80% indirectly, so it could transfer it to them. Okay. But C Limited, no, because it owns only 64%, so it cannot transfer the losses to them. So take note of that. Since the 64 is less than 75, it cannot surrender its trading losses to C. Okay. So which companies are 51% related of P? Okay, are 51% related, or you can say 51% or more. All right. So P Limited owns 100% of R. Easily, I will include this, right? What about this? Let me not go ahead of time. Let's just work step by step. And now it owns 80% of Q, right? And owns 60% of S. But indirect between S and W, S owns 70% of W. So if you want to see the indirect relationship between P and W, it will be our 60% times 70%. So we will determine, okay? What about this one? 80% easily detected, right? But Q Limited owns 90% of T. So the indirect between P and T will be the 80% times the 90%, okay? Which gives us something around 72%, okay? So easy to do these computations. Now let's see the implications, all right? So we realize that, like I said, 80%, okay, 80%, which is Q, will have to be included. T effectively was 72%, have to be included. R, that's 100%, right? Has to be included. And then S, 60% has to be included. But the other one, which is W, is 42% to be out, to not be included. Which companies are 75% related companies of P? Related of P. So 100% of R. We need to include it, right? 80% of Q. We need to include it. What about this and this? The indirect between P and T. We got 72%. It falls short of the threshold, right? Falls short of the 75. What about 60? It falls short of the 75. What about the effective between P and W? It's 42%. It also falls short of the 75% threshold. So now, if we take a careful look, realize that only Q Limited and R Limited would fall between the threshold of 75, but the rest were outside, so they will not be part of the 75% threshold. Which other 51% group companies exist? which other, okay? So yes, we found 100% of R, which we included. We found 80% of Q, okay, which we included. And we found 72% of T, which we included. And then we found what? 60% of S, which we included in an earlier narration. But between these, A and W, we realized it was 42. So we need to exclude it. But what about other groups? Other groups, Q and T, won't we consider them as well? What about them? What about S and W? Just these two. Won't we include them also? Okay, so it appears there could be other legs we could consider, other groups, okay? So, like I said, first we have our Q. We have our 72. We have our 100. And we have our 60 for the P limited with the guys, okay? The others are also what? S limited and W limited. Okay, S limited and W limited, where there is a 70% holding existing between them. Okay, again, yes, which we looked at. Okay, so there could also be other other holdings there. So S limited and W limited. Okay, S and W. All right. Now we can take another look at this. Okay, so we have which other 75% groups exist? Which other 75% groups exist? Okay, which other 75% groups exist? So in the initial one, we found Q, P limited having a relationship with 80, with a Q and then with R because they exceeded the 75. Okay, but the rest we did not include because they were outside of the 75. Okay, but which other ones could exist between 75? Okay, S and W, no, it's not up to 75. But what about Q and T? 90. So we can consider that as another 75% grouping. So Q and T is another 75% group that exists. So in terms of this grouping, what we do is to surrender reliefs, okay, which companies can then surrender reliefs or losses to the others within the group. So that's one thing we'll have to look at. Now, any member of a 75% group holding may surrender losses to other members of the groups. And this could take various forms, okay? So a holding company could surrender the losses to a subsidiary. A subsidiary could also in return surrender it to a holding company, and a subsidiary could also surrender it to a fellow subsidiary. But again, there is another option, okay? There's another option where the company may then relieve the losses against their own TTP, okay? Against their own taxable profits, okay? Total taxable profits. So there could also be that option. Now, let's take this scenario slowly. Now, group loss relief or surrendering companies, the main losses that can be surrendered, okay? What are the main losses that can be surrendered? Within the current period, we could surrender our trading losses in full. And in the period brought forward, again, we could surrender trading losses only if the surrendering company cannot use the trading losses. Okay, if we cannot use it, to surrender it. In the current period, we can surrender trading losses in full only if the QCDs, the qualifying charitable donations, are not relieved, and only if the property business losses are also unrelieved. But again, we cannot surrender our chargeable gains in this scenario. But in the scenario of brought forward, trading losses can only if the surrounding company cannot use the trading losses, and only if the company, okay, the property business losses cannot also be used by the company, all right, in such scenarios. Now, if we take, or again, we could have special arrangements for the chargeable gains. For the chargeable gains, we could have special arrangements. Now, in terms of unreliefs, okay, the QCDs and then the property business losses are only unrelieved if they exceed any other income and gains before the deduction of any losses, okay? So whether they are used within the current year or brought forward or carried back, okay? We'll take a typical example and we'll better understand what we are doing here. Now, again, unrelieved QCDs are treated as surrendered before unrelieved property business losses, What about capital losses? Can we transfer it? We'll look at it before the end of the slide. All right, so a typical example like A company, okay, so A Limited with 75% subsidiaries, okay, the question being looked at is what is the maximum amount they can surrender to each 75% subsidiaries. So the year ended 31st March 2021, okay, so trading loss is 130, investment income is 2,300, business property loss, okay, property business loss, sorry, is 15,000, and then QCD space are 4,000, and capital loss of 12,000. Take note of this, okay, and then the losses brought forward of 50,000. What is the maximum amount A can surrender? Now, so we redraft the statement, okay, in terms of the results. So we have a trading loss, okay, we have a trading loss. Now, any excess property business loss, QCDs and trading losses brought forward should be adjusted, okay? Now we have a property business loss of 15,000, a QCD paid of 4,000, okay, knock them, and then the trading loss brought forward of 50,000. When we add them, we are getting 69,000, okay? When we add all of them, get 69,000. Our income, which is a gain, let's knock it off the losses, which we have accumulated 69, and we get 66. Have you realized that the capital loss of 12,000 is missing? We did not consider it, right? We'll look at it and we'll see the rule, what it states. Now, it means that at the end of the day, this 66,700 added to the already trading loss we've made this year gives us a total of 196,700. This is the maximum group relief that A Limited can surrender to its subsidiaries. Now, what is the maximum amount of loss that A Limited can surrender? The explanation. So first of all, the current year losses must be surrendered in full. Now, only excess property business losses, QCDs and trading losses can be surrendered. Capital losses cannot be surrendered. That's why the 12,000 was totally omitted in the computation. All right. So these losses, the property business losses, the qualifying charitable donations and trading losses can be surrendered. And these are the losses which are reduced by the amount of other income. So if there's any other investment income, rental income, we should reduce it, use it to reduce these losses, and then to be able to then determine the final amount which we can, or the maximum amount that we can surrender or absorb, okay? Now, we go to the relief system. So there's a claimant company who will assume the loss, okay? One company transfers or surrenders the loss and the other person claims it. Now, the relief which is taken is always set off against the TTP of the same period as the surrendering company's loss-making period. So if the loss-making period is 2020, then it should be set off against any relief within the same year of 2020, not in any other year. Okay, so coinciding years is very key. Now, the TTP, okay, the total taxable profits, the claimant company must ensure that it has used all of its own losses. So if I have my own losses this year, I need to absorb it. I need to utilize all, okay, except losses which have been carried back prior to claiming any loss relief and after any QCDs have been deducted, okay. Let's take a typical example. Now, there are two companies, High Limited and Low Limited. They all have the same year end, okay? Now, trading loss for High high made a profit 120, whereas low made 180. Chargeable gain was 5,000, 75,000 respectively, and QCDs paid was 12,000, but nothing for low. And then trading losses brought forward for high was 20,000 and nothing for low. Now, low is a wholly owned subsidiary of High Limited. Both are UK residents or based in the UK. Now, procedure for group relief, okay? The claimant company is high, right? They are making the profits, and low is surrendering the losses. So High Limited must calculate its TTP, ignoring any losses which have been carried back, all right? Now, the surrounding company is Low Limited, like I said, no conditions exist with current year loss, okay? The options available to Low is that they could surrender as group relief. They could carry the losses forward, or they could use the loss itself against other income with possible carryback. Okay, that's one other options that they could use, okay? Now, like I said, the maximum amount that that High can claim, what is it? Okay, let's take a typical calculation and see what we get, okay? So you realize that High Limited, okay, High Limited's profit was 120. There was a loss brought forward, so let's offset it. There was a chargeable gain so offset the 20,000 from the 120, get 100. Add the chargeable gain of 5,000 and we get 105. Now the QCDs paid, let's knock it off, subtract it, and we get a total of 93,000. So these 93,000 is what the maximum relief that High can claim from the total amount of losses that Low is transferring to them. Okay, so this is what they can use or to offset or apply in terms of the maximum group relief that they could claim, the 93,000. Okay, so remember they had to take care of their own losses before assuming any other person's burden. Even though they are all the same group, it makes sense. Bear your burden before it carries someone's burden, okay? Surrounding company, no conditions exist, okay? So like we said earlier, the current year loss may be used, the current year loss can be used in any other way that the company wants, okay? The options available is that Low Limited, which has made a loss of 180,000, could carry all along, okay? It could carry all forward, or it could pay part of it as, let's say, use 75 of the 180,000 against chargeable gains, okay? And either carry the remaining 105,000 forward or carry it back, okay? Or they could claim group relief up to a maximum of 93,000. I mean, that's what High had, okay? High Limited had as the maximum balance with which they could use for the group relief, okay? So take note of that. The option is they could carry it forward, or they could use some to offset against chargeable gains, and then any balance could be carried forward or carried back, okay? Now, like I said, it should all be in the coinciding period, okay? So one company within the group surrenders in this year, and the other person who is claiming should also be able to claim within the same year. So the recommended text page 437 gives us detailed examples. All right, so in summary, in terms of relief, but we've not ended, we'll look at some more details or calculations, okay? So surrender company, current loss, no conditions exist. Try to maximize the relief, okay? For the claimant company, claim any TTP computed using all losses that could have been claimed, okay? And all losses except carryback, okay? And they should all occur within the coinciding period. So match them up, match the period of the loss with the period of the other companies, okay? Match them up, not different periods, coinciding periods. Now, we need to use these group reliefs effectively, but let's keep some points in mind, okay? So at the end of the day, we are looking at minimizing the overall tax burden or tax liability. Now, claimant companies should consider claiming less than the full amount of capital allowances available for any accounting period so that they could maximize the profits available for group set-off. Also, a company which has incurred a trading loss might lose tax relief on QCDs if the loss is set against the company's total profits. Hence, the loss of tax relief from QCDs might be avoided if the loss is group relieved instead, or when the group is relieved first, okay, so that we can take advantage of the tax relief system on the QCDs. All right. Now let's take a typical example as we round up on the computation. So Gandalf Limited owns 85% of Golom, 100% of Frodo, and 100% of Aragon. Now Gandalf Limited indirectly owns 85% times 75% of Precious. Now Golom owns 75% of Precious. So we can see if we work these scenarios, you realize that there are two different groups there, right? There are two different groups there. And what are these two different groups? So you realize that the group one is Gandalf and Frodo and Aragon and Golem. Okay, so that's the first group. The second group is between Golem and Precious. Also, G and P is one. And then the GF GA is the second group. Okay, so this is the second group, and this is the first group. All right. But if we want to take the effective between Gandalf and Precious, we realize we'll not get 75. So 85% of 75% should give us something around 64, roughly, around 64% approximately, which is outside. So Precious will not form part of the the Gandalf group in terms of relief purposes, okay? Now, let's proceed and see. So, like I said, group one is made up of Gandalf, Frodo, Golem, Aragon. Group two is made up of Golem, Precious. Let's assume Gandalf has 245,000 loss to be surrendered to Frodo, Golem, and Aragon. And let's say Golem also has 75% loss, which can be surrendered to all of them. So Golem can surrender to this, right? Because it's part of that group. Golem can surrender to this, it's part of that group. Golem can surrender to this. And again, Golem can surrender to Precious, either all of the four ways. All right. Let's take a tabular representation. So this is what we're saying, okay? Let's take through these calculations and see. So Gandalf has 245 loss. Golem has 27,000 loss. The rest have profits. The loss brought forward is only Aragon, 20,000. Nobody has any other loss brought forward. Chargeable gains is 32, nothing for Frodo and Aragon. So nothing for Frodo and then Aragon, okay? And then 3,000 for Golem and 2,800 for Precious. Rental income, 10, 5, 5, 10, and 6. Okay, QCD subtracted is 22. Nothing for this, 10, 10. Okay, and then we assume a tax rate of 19%. The year end for all of them is 31st March. Remember, coincided period. Okay, so we have group one, which we've shaded in a different color, and group two in these two yellow colors. Okay, now should Gandalf use the whole of 245,000? Okay, trading losses, should it use it by his own self, or it can transfer it to the rest? Okay, so should he use the whole of this, or I should try to spread it, right? Share it, okay, or share it. What should he do? Only Precious cannot be affected here. All right, so let's see. Now, it will not get relief for the 20,000 QCD donations in the year if it tries to use it. Okay, if you use it by itself, it will not take credit for this, okay? Therefore, the answer is no, don't use it yourself. Surrender it, surrender it. Now, how much of the 245,000 could Gandalf give to Frodo, Aragon, and Golem? How much of this could it give to Frodo, Aragon, and Golem? All right, let's take a typical calculation and see what we will get. Now, Frodo has a profit. add the rental income, and less the QCD. So you get 283. Aragon had a profit of 295. Take out your brought forward of 2,000. And rental income, I think ideally you should add this, okay? You should add a 5,000, okay? And get some other good answer there, okay? So this should have changed to 100 minus 20. So this should have changed, okay? So just take note of that. So we have to add the rental income, not subtract. Now, Golom must use first its own losses, okay? Now, Golom, remember, has a loss. So take care of your home before you take care of the other. So it must absorb all of its 27,000. So we'll say, no, let's knock this one off. But at the end of the day, Gandalf has 245, and it could use Frodo to absorb everything, or you can still transfer portion to this and portion to that, depending on what the group decides, okay? Now, what else could Gandalf do with the 245 trading loss? What else can it do? Okay, if it surrenders to those two guys, what else can it do? Now, it could also carry it forward against its total profit. So it could carry it forward so that in the next year, if they make any profit, they could offset this 245 against it, okay? Again, yes. So again, what else could Gandalf do with its trading profits, okay? We said it could carry it forward, okay? What else could it do? The other option is that it could keep it for itself, okay? So first, there are some profits there, 32,000, some gains, chargeable gains of 32, and a rental income of 10,000, less the charitable donations of 20,000. So you get 22. So it could offset this 22 against the 245, okay? So that the group relief will be 245 minus 22 and still has 223, which it must carry forward. It can decide to carry forward or might decide to spread it, okay, surrender to any of them. So the group relief election must be made first, okay? The group relief election must be made first. Take good advantage of the charitable donations, qualifying charitable donations, and then the rest, you decide what to do as a group, okay? Now, should Golom use its own trading loss against its other income? So Golom is also making some trading loss. Should it use it, apply it against its other trading income? What should it do? Okay. Now, yes, it makes a lot of sense if it uses it against its other income, it could lose relief for the QCDs paid, okay? So do not use its own trading loss against its other income. It should not. The answer is no, you should not, okay? Now, how much of Golom's 27,000 can Precious claim? Now, Precious is making a profit, trading profit, other income, and then QCDs subtract of 10,000. If we do a simple calculation, what do we do? Or when we do the redrafting of the statement, realize that the total taxable profit of Precious is the 370 plus the other income less the charitable donations, and it gives us an answer of 368,800. Therefore, Precious can take all of these 27,000. So Golom could elect to give all of the 27,000 to the other group member, which is Precious. So all the 75,000 could be absorbed. Yes. So parent company is this, just to run through this. Parent company is 75 subsidiaries and also the 75 subsidiaries of the first subsidiaries. So ultimately the parent company must have an effective interest of over 50%, okay, in all companies ultimately. There is also this relief that they could claim, which is the chargeable gains, but it is less rigorous than the group relief, okay? Now, groups may be established through companies resident anywhere in the world, but under chargeable gains, what happens? Is it for all or just for those residents in the UK? We'll look at that in a bit. So A company owns 75 of B, B owns 75 of C, C owns 75. What are the groupings that we can have? What are the companies we can have over there? So take a look, realize that we have A, B, C, Limited, 75% ownership at each level, and A Limited owns over 50% of C Limited, okay? So C Limited and D Limited cannot form separate groups, okay? C Limited and D Limited cannot form separate groups, as C Limited is part of A Limited, okay, gains group, and cannot be itself a parent company nor form a separate gains company. All right. Now, the next thing is, which companies form a group relief? For a group relief, which companies form? So we have A and B, 75, right? A and B, 75. We have B and C, 75 holding, right? And we have C and D, also 75 holding. So these are separate groups which can work to claim group reliefs, okay, for each of them, between A and B, between B and C, and between C and D. Now, for tax implications, capital losses cannot be group relieved. Take note of that. Now, group companies can transfer chargeable assets between themselves without incurring any chargeable gains or allowable losses. So that chargeable gains and allowable capital losses arise in the same company, okay? But now simpler procedures have been proposed that group companies can make an election such that the capital gains and capital losses incurred by one company are treated as arising in another company. Also, this allows the gains or the losses to be brought forward in the same company without having to actually transfer assets, okay, between them physically. Only the current year chargeable gains and allowable losses can be transferred and not brought forward losses, okay? And there could also be joint election, which could be made within 2 years of the end of the accounting period in which the asset is disposed of outside the group, okay? Now, AIA, okay, the final lap before we wrap up, the AIA. So only one AIA is available to a group of companies, okay? And the group members can allocate the AIA in any way, but only one is available, okay? Now here we are looking at a group, the AIA, okay? A group for the AIA is where the parent holds more than 50% in another UK company or companies at the end of the accounting period. So UK company, all right. Now A Limited, for example, let's say acquired a subsidiary on 1st April 2009, that is resident overseas, and also acquired a further subsidiary on 1st July 2009, that is resident in the UK, and was still holding on to this company at the year end, okay? How many companies would be in the group for the purposes of AIA? Only the one located in the UK. Only the UK resident will be the one to be allowed, okay? So that's it.